Hi there, I'm Tyler Ballhorn, and this is the Stockscores Market Minutes for May 31st, 2013. If you are not already a subscriber to my free weekly newsletter, you can do so at the address you see on screen. That's stockscores.com/newsletters.asp. This week's topic, putting a score on your trading ideas. Any strategy that I do always has some must-have rules, but there are some rules which are simply nice to have. For example, I might want to buy a breakout from a good chart pattern, but that quality of the trade is improved if it is also a strong market, or having a strong sector, or if the stock is able to close near its high of the day. Most trade ideas have something going for them, but some trading ideas are better because they have more factors in their favor. It is a good idea to create a checklist of criteria to consider for your trading strategies. Include the must-have items, the things that must exist for you to take the trade, but also include things that make the trade even better. The more criteria that are satisfied, the better the trading opportunity. So, for example, you might look for breakouts on multiple intervals. Oftentimes, a strategy only looks for a pattern set up on an intraday chart, but if you have a daily chart that is also strong, that is going to improve the quality of that trade. I like to see things like breaks from low volatility, stocks hitting new highs, closing near their high on the breakout day, a show of optimism, which is rising bottoms. The more liquidity a stock has, the better the quality of the trade. Is the sector or overall market strong? That's going to help. Is there a catalyst fundamentally that can drive stock price? Make your list of criteria and then use it when you are evaluating trades. Now, for example, here's a day trade that came up today on Krispy Kreme donuts. And you can see it had a lot of good things. There was abnormal volume on this intraday 2-minute chart. Actually, this is a 5-minute chart going back 2 days. It built a nice pennant pattern, and then it broke from that pennant pattern a little after 1 o'clock. But the negatives were the overall market wasn't very good. Positives, the stock was hitting a new high. Now, if the stock hadn't been hitting a new high, and given the overall market was doing poorly today, I might not have taken this trade. It's all about evaluating the big picture, multiple items, and saying, is there enough going for this stock that it can outweigh an otherwise negative market? All right, let's get into this week's analysis, and let's start off with the chart of the overall market, which is the S&P 500. And you can see that the S&P broke down today from a falling top, and that tells me that this market is likely to go lower in the near term. Now, it doesn't have considerable downside until the first level of support at that upward trend line. On the S&P 500 ETF SPY, that's about $160, maybe $161. And so not considerable downside, we're talking 2 or 3%, in fact even less than 2%, but still in the short term, don't be surprised if we see some weakness. And really, in the context of the upward trend that has been in place all year, a pullback is not out of question. What will happen, however, is that with that pullback, we are likely to then begin a period of sideways trading. Because the market went parabolic, it's going to take some time to cleanse the market of that emotion. So I wouldn't say overly bearish, but at least neutral on the S&P 500 right now. TSX 60 also had a negative day today, and it broke down after hitting some resistance, a little bit of a falling top forming here. So again, I don't see considerable downside yet, although that could change if we get a lot more weakness than expected, but it wouldn't be unreasonable to see the TSX pull back here in the near term. Treasuries have been selling off, which means bond yields have been going up, and that is a bit of a negative for the stock market as well. But Treasuries, at least if we use the 20-year Treasury bond ETF as a proxy, Treasuries are at support and are trying to hold that support level. We can see that there was pretty significant weakness early in the day today on strong volume, but it came back to close near its high of the day. Now, we haven't reversed the downward trend here, but if we see the Treasuries hold support, well, that is a good sign for the stock market because it means interest rates aren't going to get too high just yet, although this is a risk factor, something we want to watch closely. Gold had a pretty good day on Thursday, breaking a short-term downward trend line, but it reversed that today. It's really a tough one to call. We've got a double bottom, but we have falling tops. We broke a downward trend line, but we gave back those gains today. My feeling is we got to be neutral to negative on gold right now. The tops falling is the critical thing for me. That is a sign of bearishness. And until we can get a break from a rising bottom, which really happened yesterday but was negated today, I wouldn't get too optimistic about gold just yet, although it is trying to make that bottom and is certainly worth watching in the near term. Oil hit resistance at the end of last week or the start of this week, and it is now moving lower from that resistance point. Not unreasonable to see it fall down to the green support line. We're not talking a considerably wide range for oil right now. It's in this relatively narrow trading range, but the tops are falling in that pattern, and that is a sign of pessimism. VXX is trying to reverse that downward trend, and certainly when there's weakness in the market, we see a little pop here. But the strength in the VIX is, I think, less than you would expect given the weakness in the market. Now, that's likely because while investors are taking some profits and maybe think that the market's a little overextended, I don't think that there is a feeling that there is going to be a massive sell-off, a big correction, everyone running for the door at the same time. At least not if we trust the chart of the VIX or the ETF representing the VIX, which is VXX. So this is a good sign for stocks because even with today's breakdown, the strength in the VIX wasn't all that considerable, and that probably shows us that, yeah, some selling pressure is expected in the overall stock market, but it's not going to be the beginning of a major corrective phase. So my outlook then for stocks is neutral, although in the short term, don't be surprised if we see a little bit more weakness, but neutral on US stocks, neutral on Canadian stocks. I think they're really just going to have a pullback in the near term and then go sideways for a while. Gold, I've switched back to being bearish. I was actually feeling a little bit of optimism on Thursday, but that was all negated today, and until we can get a nice break from a rising bottom, I think we need to be bearish on gold and bearish on oil. Again, not a considerably wide trading range for oil. It probably is just going to drift lower to support and then bounce and really just kind of grind its way sideways, but those falling tops are a sign that there's really no long-term optimism building in oil. U.S. stocks are likely to continue to pull back in the short term, and the recent strength in the Canadian market is likely to end in the near term as well. Gold is trying to base, but it is fighting a good deal of pessimism. Oil has got stuck at resistance and now appears likely to move down towards support. Well, that has been the Stockscores Market Minutes for May 31st, 2013. Have a great week in the market and trade well.